There's a sense here of, this combination of easy monetary policy, stimulus in the form of fiscal spending here. Is it priming India for a sort of bull market that we saw between 2003 and 2007, or how much of that is already kind of baked in?
I think the Indian markets are, have reacted very positively to the measures which are taken by both the central government and RBI to propel the GDP growth. And this has really helped because even pre-COVID, I think the growth was had slowed down significantly. And because of the COVID situation, I think the loose monetary policy and the fiscal policy, that's really helped to boost sentiments. And government recently in the budget also indicated that this is, this is not very short term, and they are going to continue with the expansion in the fiscal policy for a while. So I think that is giving a lot of boost to the markets right now. I think the impact on the economy is going to come with a lag, but it has definitely boosted the sentiments for the corporate sector as a whole. And I think the most corporates with whom we've been interacting, they are suggesting that there is a pickup in the sentiments and momentum, and the demand is picking up. However, we've seen the capex picking up very slowly, and I think we will have to see as it goes that how long it really sustains.
Sohini, very quickly here, India, like other markets globally, have attracted a lot of retail investors, plus India has had a huge amount of foreign money come in. How is that changing the dynamics that you're dealing with?
Yeah, I think the flow of money has been pretty good into the Indian markets, and I think the rally what we've seen in at least last 6 months has been driven a lot by the foreign money coming in, while the domestic mutual funds have been seeing an outflow. And despite this outflows, I think the markets have moved to the new highs, and that is clearly driven by a lot of foreign money being pumped into. And that is also on the back of the expansionary policy we see across the globe, and India benefiting out of that for sure.
Sohini, do you see more volatility, irrational swings in the Indian market because of the influx of Indian retail investors?
Yes, I think, when what we've seen is that a lot more action on the mid and small cap side, and especially when the retail money comes in, that is the segment of the market which she's quite a bit of a volatility and action there. I think what we'll have, so I think the volatility is going to be there, and it is likely to stay as valuations have been pretty stretched now. So unless the earnings really catch up from here on, I think we are going to see the push and pull in the market for sure.
I'm looking at your allocations, and your biggest allocation for your mid-cap fund is pharmaceuticals. What assumptions are you making about how much more they can gain from here?
So I think in the mid-cap fund, there are 2-3 sectors where we have a large allocation. Pharmaceutical is one, definitely, as you mentioned, and it's also the industrial sectors and the real estate construction sectors where we've had a large bets there. Also on the consumer discretionary side. But talking about pharma, I think what exposure we have is a mix of both the domestic oriented companies, which should see the pickup in the growth as the companies come out of the lockdown, and when the individuals have become much more sensitive to the health issues and taking care of themselves, and there is a big boost to the overall healthcare market where we see a lot of action. And we also have some exposure to the players which are into the US market, and they are also likely to benefit from the the new and the fresh approvals coming for the drugs. So I think the outlook for the sector is quite good for next couple of years.
So Sohini, I mean, that's just to that, what did well last year necessarily won't do well this year. What are you at the moment looking at, which has changed from last year in terms of allocation? That's one part of the question. And do you think 2021, if we are talking in 8-9 months from now, how will it look for you from an equity perspective?
So I think what I've been doing is that having a very balanced exposure into my portfolio across different sectors, rather than picking and choosing any one particular sector per se. Mid-cap fund especially is a lots of bottom-up fund, and where we are more focused on the stock selection rather than the sector allocation in a big way. But the bigger bets are on definitely on the industrial activity picking up, the real estate sector, seeing a improvement in the sentiments as the supply has been gradually coming down in the sector, and and the new supply has not been really created. So even with muted demand, I think the outlook for the sector has improved significantly. We are also looking at some of the consumer discretionary names into auto ancillaries, into the consumptions on where people have been staying home, etc. And so I think there also on the discretionary spending, we've seen a huge pickup where people have focused on their lifestyle much more and staying at home. So I think that we have a mix of that in our portfolio, where we believe that there is a huge scope for across different sectors to gain from here on as well.